Hey guys, we're here at our new property, Timberwalk Apartments in Houston, Texas, and I wanted to talk about what we have got going on here. We've got Timberwalk, 300 units. As you can see, classic 1980s vintage construction, and then right next door we have our new property, our newest property in the portfolio, Madison at Bear Creek, which is 180 units, also similar early 80s vintage workforce housing. And between the two properties, we have 480 units right here in this vicinity, which is going to be great for having economies of scale and being able to spread out our payroll burden across the two assets and maximize, the expense savings on that front. Also, really exciting, what's been happening here at Timberwalk is we have Bear Creek Crossing, which is the property, again, similar style as this, just literally right next door. And that property is unrenovated, but at the time of acquisition, it was it had rents that were $100 higher than what we had in place here. So when we took over here, right away on renewals and new leases, without even starting our renovation program, we were able to get $75 to $125 increases in rent. And now that we are also going through our renovation program and implementing a platinum upgrade where we have granite and stainless steel appliances going in, that's going to push our rents even further, another $100 above just the in-place loss to lease. And then when you factor in the washer and dryers being installed into every unit, that just furthers the value add and also attracts a higher quality tenant base when you're talking about putting in washers and dryers in the unit rather than having a laundry facility on site. So over at Madison at Bear Creek, our sister property next door, very similar story, also unrenovated units over there. We bought it from a long-term owner that had the property for over 11 years and never touched the interiors. So it's very rare to find properties these days that really have untouched interiors. Usually you see properties have been already picked over, they've been renovated, they've been maximized on their value. But fortunately we were able to find that opportunity and secure it and couple that with a nice long-term loan that is giving us kind of the best of both worlds, where it's a bank loan with the flexibility to exit early. So if we implement our value add and rates come down and we can take advantage of the capital markets, we could sell or refinance in a shorter period of time. Or since it is a 7-year loan, we can hold longer term and ride out potentially an economic downturn or a delay in our business plan. So that gives us a lot of flexibility as well as downside protection, which is obviously really important given where we are in today's uncertain environment. So with our Madison at Bear Creek acquisition, we are of course able to use Timberwalk here as intel in making that purchase decision. And we felt that we were the natural buyer given that we had just acquired next door and that we could create this economies of scale. So that gave us the confidence and more predictability in our underwriting when bidding on that asset. And that is of course how we were able to purchase the property, and it made it a very easy decision for our investors looking at the experience that we had here at Timberwalk and what was going on already in making the decision on Madison as well.